Trump also addressed the upcoming Supreme Court oral arguments on whether his tariff policy is legal.
I think it's the most important subject discussed by the Supreme Court in 100 years.
I've been saying over the last several months, the legality of tariffs is going to be a huge to-do. It's not just for our economy, it's also for these things over through here. So if you're watching this video, most likely you're buying a home or looking to refinance and trying to figure out what's going on with those and the whys behind it. Folks, my name is Dan Frio, and my goal is to help you solve just that. So in today's data, we're going to look at tariffs, the legality of them, but we just got some breaking news from ADP payroll numbers. Well, you know how I feel about ADP, but their numbers came in pretty good. So we're going to look at this, how this data, this tariff news, and all the other stuff will be affecting these today and why. So without further ado, folks, let's dive into today's news. So did you vote out there? Let me know if you voted out there. If you did, I think there was a huge turnout, so good for you guys. Doesn't matter who you voted for, that's your prerogative, but let me know if you voted down below. Let's get over to what's focusing in on the news today and why the ADP payroll numbers are so important. Now, ADP comes out each month and they give us their numbers. They're usually dismal. But with the government shutdown right now, we don't have any data. Why this is important? Well, if we go over to this, the Federal Reserve, last time they came out, they said, okay, so we know inflation is one-lived. It's because of tariffs, and we know they're going to be a little bit volatile. But our biggest concern now is the job market. Well, today's news from ADP, let's roll over to it. Here's the economic news we had from ADP. They said that last time they did their survey, there was minus 29,000. Here, let me scroll that in so you can see it right above my head. See ADP payroll? They had the last reading as negative 29,000. They said it was going to increase by 32,000. It's up 42,000. So if you look at this, if the Federal Reserve's biggest concerns, they're like, okay, and we can deal with inflation right now, but the jobs market, that's where we really got to solve the problem. Well, this isn't a bad number. 50,000 or close to 50,000 is a pretty solid number. So if it was a negative number, the Federal Reserve would come in and they'd cut immediately. But this number isn't so bad. So let's get over and see how the markets are reacting to this right through here. But if you're a homeowner right now and you're trying to figure out all the volatility of this stuff, have you ever tried to refinance? Or look at the numbers. Well, let me give you some help. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. What that means is I'm licensed in all 50 states as well as Puerto Rico. If you're out there anywhere, you're looking to buy or refinance, I'd love to help. We have a tool right here for those homeowners. Have you been tracking mortgage rates and you just seem to miss it every time? Well, check out the RateWatch 2.0 tool. This I created to help you guys, do this. Let me know what interest rate you'd be interested in refinancing. When that number hits there, I'll call you up and we'll go through the numbers, see if it makes sense. If it does, we'll get the paperwork started and you're locked in. But let's get over to see where rates are going so you can monitor these things. So let's get over to it. To do that, I usually follow the bond market. To do that, I follow the mortgage bond market. A lot of you guys don't have access to this. If you're new to my channel, here's how this works. We follow this bond right here. You can see up at the top, it says MBS. What that means, it's a mortgage bond. Okay, all you have to understand is this. If the price of the bond's going up, that's good news. Price of a bond goes up, that means rates are coming down. Okay, so if you look at this, since the Federal Reserve cut rates last week, here's when the Federal Reserve cut rates, and then all of a sudden, whoom, it went way down. Over the last couple of days, we're getting some reprieve, so stay tuned. I'll give you my predictions on where I think rates are going right now. Job openings right now, they're dismal. They're dismal. But what the markets are telling us right now, there isn't a huge layoffs, but there also isn't any really hiring. That's why the jobs market is just kind of flat as a pancake right through there. If we go over to the equity markets, it's kind of a mixed bag of goods. We got the Dow Jones, it's up 4 ticks. We basically have nothing going on. Look at this. S&P's down 9, the NASDAQ down 55. We got oil, $60 a barrel. You guys know how I feel about oil. I love it at $60. You go below that, it's a little hard. You'll see oil companies start cutting production, and that'll increase the prices. So right at $60, it's in the sweet spot. You also have the 10-year Treasury. It's up just a tick, but it's not rallying as high as, it could be, based on a lot of the events that we had. So then we go over to the earnings report. Now, here's where you're starting to see, or you really need to focus in on some of those companies out there that the average consumer uses, like McDonald's and Taco Bell. So we're going to go over those earnings. Let's see if McDonald's came out with their earnings yet this morning. They were supposed to come out. Not yet, but it looks like McDonald's might have come in. It hasn't come in yet. So at the closing bell, I'll let you know how a lot of this stuff goes. But now here's here's what we want to look at. The Federal Reserve, they monitor this stuff right here. They monitor the PCE, which is inflation. That's what they call the PCE. You and I, we look at consumer inflation, the CPI. Well, the Federal Reserve, they monitor the PCE, and that's the personal consumption expenditure. It's been below 3. They wanted it 2. Okay, so that's been a little elevated. Here's the tricky part right through here. The jobs report, they don't want this thing to hit 5. Over 5%, that means we're not at full employment. The Federal Reserve was created for full employment and to keep prices in check, aka inflation. Okay, so they control one rate. It's right over there. So the federal funds rate right now, the rate the Federal Reserve controls is 3.7 to 4%. There's a spread there. If you go over to see where it's going to go, we go over to the RateWatch tool. What this is the Chicago Mercantile Exchange. They use futures and options to kind of predict where the Federal Reserve is going to go from here. So in 35 days, yeah, I know it's 35 days from now, the Federal Reserve is going to come out. What's expected for them to do? Well, you go over through here. The federal funds rate currently, remember I just showed it to you, is 3.75 to 4. Okay, so where's it expected to go? It's expected to go to 3.5 to 3.75. That means there's a 70% chance the Federal Reserve is going to cut right above my head. Okay, right when the Federal Reserve cut, this was like 95%. So it's depleted quite a bit. Where's things going to go? There's going to be a lot of news coming out between now and then. Here's my thoughts. Okay, so we have the election behind us, and it was great turnouts. So now what you're going to use or see is the federal government's going to get together, and they're going to, now that the elections are over, people jockeyed for all their positions. Now the government's going to come back and say, okay, let's get a resolution here. So they're going to come back and they're going to put everything together probably within the week. Mark my words. So now what we're going to get is we're going to get a lot of data that's would start to fill the gaps in. What are those? Well, we got the ADP payroll numbers, and those are usually pretty bad indicators. But tomorrow, what we would normally get is initial jobless claims, continued claims, things like that to really give us a true beat on the market. So we need this data to figure out eventually at some point what's going to go on here. Well, we're going to get it. I think we're going to get it sooner than later. Here's my expectations. I'm thinking the jobs market isn't as dismal as a lot of people think. I'm thinking the ADP payroll numbers might be on track. So if we don't have the employment numbers crashing, the Federal Reserve might be saying, okay, inflation, it's teetering on 3. The jobs market that we were really concerned about, we wrote about in our transcripts, isn't so bad. So could we hold off? And that's what this is indicating to us. Maybe, just maybe, they're going to hold off on cutting rates. So if you're a homeowner, I give you some tools to figure this out, to maybe figure out a time to refinance. So if you're looking to buy or build, what do you do? Well, folks, I've been saying over the last few months, I said Q4 of this year, we're probably going to see rates about 6.25 to 6.5. We got there. I revised some of my forecasts, and I said, okay, at this point, I'm at 5.99 to 6.375. And why I go to 6.375? Because these things, they actually trade in 8s. I bet you didn't know that. So there is no real rate at 6.33. It would be 6.375 and 6.5. That's how those work. So I'm still sticking with those projections. I don't really think the Fed at this point is going to be forced to cut. Okay, they're going to give us some insinuations of this and that, but I don't think the markets are going to be that spooked by a lot of the data once it does come in. Now, the inflation numbers, again, we know those might be a little bit elevated, and we'll track those, but I don't think the news is going to be as bad as a lot of people think. So my expectations are this, folks. The federal government's going to be out of lockdown over the next maybe 7 days. We're going to start getting additional data in. I think the data is going to show things aren't as bad as a lot of people expect. Okay, so if you're looking to build or buy, just get pre-qualified at 6.5, maybe 6.75, just to make sure. If you can afford it at those prices or those rates, I think you should be in a good situation. A lot of people in the past, what they were doing in 2020, 2021, they were building these homes, and they weren't ready for 9, 10, 12 months. And a lot of people, when they qualified, they were qualifying at 4% interest rates. At that time, rates went to 7 or 8. And their house payment almost doubled. And they're like, I can't afford it. I don't think you're going to be facing this in this situation. My Q1 of next year, basically as the data progresses through, I'm still going to say at 5.875 to 6.375. It's going to be in that range. And that's what I need you to work with. So if you're looking to refinance, visit our website. Check out the tools that we have. If you're looking to buy, check out this tool right through here. This is actually a grant up to $7,000, and it's forgivable. What it means is you don't have to make any payments. You don't have to, this isn't a lien on your property. So what will happen is if rates continue to go down, it's easy to refinance. Now, where a lot of people are getting into trouble is when they took a down payment assistance loan. And then when you go to refinance, that loan was $10,000, $15,000, $20,000. Well, your house, you didn't put enough money down on your house to have that much equity. So then when you go to refinance, you can't. So you need some help with this. You need some help with buying. You just need somebody to talk to. Reach out to us. We'd love to help. So folks, my name is Dan Frio. I'm licensed in all 50 states as well as Puerto Rico, and I have a slogan. My slogan's this: one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, I'll be live today. It's going to be about 1 o'clock Eastern or 2 o'clock Central. We're going to show you behind the curtains how we do it. Join us then. But what we do is I work at a bank that we're set up with over 30 other lenders. I can use their programs, their products, their rates. So let us take care of the heavy work when you're out there searching who's got the lowest rates, who's got the lowest fees, or Dan, even what the heck's going on with these and the whys. You can reach out to me and I can guide you all the way through this if you're looking to refinance or looking to purchase. So folks, I'm expecting mortgage rates to just stay steady right now, and there's no shock and all coming down the pike right now. I think the ADP payroll numbers kind of at least calm the markets for now. Once the government opens back up and we start getting that data, that's when it's going to get a little bit dicey. So make sure you check out, put in your interest rate now. So if rates do go up, you can protect yourself from that. And if rates go down, you're on our chart, so I can reach out to you when that rate hits exactly where you want to look at refinancing. So thanks for watching for today, folks. I will be back at 1 o'clock Eastern today with our how do you compare over 30 different lenders. Check it out. It's pretty interesting, especially if you're out there looking to refinance or buy, maybe even build. So check it out. I hope to see you today at 1 o'clock. Otherwise, I'll be here at the closing bell to let you know how this mess ends for the day. Thanks for watching, folks. And if you could do me one thing, subscribe down over there. I'm trying to hit 40,000 subscribers by the end of the month, and we're about 300 away. Help me get there. Thanks for watching. See you later today. Bye-bye.